Good afternoon, everyone. Welcome to Hit the Bid here on March 15th. This is Ty Robbie here with your Week 11 Market Watch. Today we're going to run through our charts and see what happened in these markets over the last week and see what we need to look forward to as we move into Week 11. So let's jump in and get started. Now, quick note here before we begin, we are seeing rollover period here in both live and feeder markets. This live cattle market is going to be moving out of this April contract and over into June, which will be the new front month going forward. And then feeders are rolling out of April here into the May contract, which will be the new front month here before this week is up. But for review purposes today, we will take one more look at April. Last week, we did see this April live contract opening up down here with a big nasty gap lower. Prices opening up at 228, kind of testing the low end of this prior demand zone created back in December. Good buyer support from these oversold, overextended conditions down here, rallying up into Tuesday session, putting a high of the week up there at 233. Throughout the remainder of the week, we had about a 3 or 4 day range here as price kind of settled in, showing pretty equal distribution here, typical signs of a market digesting this recent volatility. After that big gap lower, we saw active selling pressure up here between 32 and 33, suggesting more distribution, people unloading positions, and more sellers continue to be active in this market. Throughout the last part of the week, we did see volume get pretty heavy down here near 230 on this April contract, suggesting a lot of heavy inventory down here. Any sort of weakness down here and offers below this point should continue to force more selling pressure onto this market and keep that downward pressure on here. At the moment, this market is just kind of seeing typical signs of digestion in this recent volatility, just kind of seeing some back and forth at whippy action here after we've seen increased ranges, wider ranges, and more volatility. Really heavy selling pressure moving away from our major averages, really indicating lots of distribution here as this uptrend has come to an end in the last couple of weeks, and we are putting in lower highs and lower lows, suggesting a new downtrend still taking shape. Our major averages all declining here, which will continue to weigh heavy on price. So as we move into week 11, let's jump over here to our June contract. We still expect to see more selling pressure as this live cattle market does face a lot of headwinds. We did see this June contract close that overhead gap here, but seeing heavy selling pressure up here near that prior Friday's lows between 30 and 31. Major averages kind of keeping price capped up there. This market using last week's, the 50-day average kind of as last week's high, continuing to act as a good line in the sand here. Moving into week 11, our pivot points are going to be basically Friday's range. Bids above 231.15 in the week ahead is probably just going to offer nothing more than just a little bit of a relief rally, another kind of dead cat bounce like we saw in the prior week. Anything back up here into this 34 to 36 area, expect to see aggressive selling if we do get back up into that area. A lot of headwinds for this cattle market, so don't expect much upside other than just kind of maybe a revisit to that prior supply zone where those sellers should step in and continue to keep this market capped. However, we did see some weakness there on Friday, kind of settling back down here near 228, which was Friday's low. Look for any offers down here below Friday's low at 228 to continue to increase the volatility and selling pressure. This market will try and retest this 224 area and try and chew through some of this leftover demand and inventory that was left over back here in December. Once we were able to chew through that, this market really could open up and we could see that selling pressure accelerate. Next stop is going to be 220 here, and we could see this thing continue to slice back down here towards the $2 mark. So at the moment, we got a lot of heavy inventory up here, and that really could increase the selling pressure if some of these lows start to give. So continue to be defensive here. This market, at the very least, is going to be see continued volatility, and at the worst, we could see a continued downside here. So I encourage everyone to raise cash and continue to be defensive right now. If this market does want to try and stage a recovery, there's going to be better chances to do that in the future. Now is not the time to try and bully this market. We want to be defensive here and look for more downside here in the week to come as we continue to see lots of signs of distribution and selling pressure here as this market is starting to unravel. So look for more downside in the week to come, and we'll continue to monitor rollover here throughout the week ahead. Next up, April feeders on the board. We did see this feeder market also with a big gap lower here on Monday. Prices opening up down there near 343, briefly testing the limits. We did see a bounce there into Tuesday's action, but that high coming back up here, filling that gap but the high for the week kind of failing up there near that prior Friday's lows, seeing more selling pressure. This market was a little bit weaker than that live cattle market. We did see this one kind of open up down here and stay off those lows late last week, while this feeder market did just kind of come right back down here towards this opening price for week 10 and settle in down there, weighing heavy on that 340 mark. We did see a lot of inventory coming in late here in this feeder market between 42 and 43. If we do see continued weakness down here below 342 and Friday's low at 41.5, look for that selling pressure really to accelerate and start to chew back down here into the 330s. Now moving into week 11 here, we will take a look at this May contract. This one is still lagging in volume a little bit, but will probably be the new front month here as we continue to roll in the week ahead. Before Friday, we should see this May contract be the new front month. Last Friday's range, the high and the low kind of being our pivot points for the week ahead. 344 being the bull pivot for the week. If we do see any sort of bids up here above 344, it's going to be nothing more than a relief rally. We still got a lot of headwinds here in this feeder market with these declining major averages. Expecting to offer some good resistance up there near 350 if we have to get back up there. Anything above that here, right between about 360 to 353, a lot of overhead supply in this and sellers in this prior supply zone up here, so look for any sort of rallies to be sold into, offering good selling points, but in the meantime we still expect to see a lot of headwinds here for this feeder market as well. Any sort of offers below 338 could really get last week's inventory to unload here and get some more selling pressures and fuel thrown on this fire here at the moment. So like that live cattle market, I encourage everyone to raise cash, be defensive if you aren't already. We will continue to see some volatility here at the very least, but are expecting more downside here in the week to come. Technically speaking, just seeing a lot of signs of distribution here, typical signs that we see towards the end of uptrends here in this cattle market. So I just want to encourage everyone to be defensive. If this market does try and stage a recovery, there will be better opportunities to do so in the future. We want to see this market kind of settle up, provide some structure to trade around, and offer better opportunities. So in the meantime, raise that cash, get defensive. These markets are continuing to suffer from the volatility and are moving into more of a corrective environment. So look for these downtrends to continue here in both live and feeder markets. Next up, we got our May corn futures on the board. Last week we saw some heavy volatility here as well. We saw a Sunday night open rallying up there towards 475, where we did see a lot of selling pressure coming in, driving this market all the way back down here towards these range lows on Tuesday, which in turn immediately snapped this thing back up into those range highs. Prices coming back up here and seeing a good battle up here throughout Thursday and Friday's action right around this 465 level. With Friday's close up there above 465, this opens the door for the bulls to take this and run with it and offer up a new uptrend. If the bulls are able to get early bids above 467.5 in the week ahead, look for this thing to come back up here and try and retest 475 and kick off a nice little uptrend here. Bulls are going to look to target $5 and try and chew through some of this prior supply back here that was created from last year, but this corn market could open up and see some pretty nice buying activity and some more buying pressure here to drive this thing back up towards $4. However, if we do see any sort of weakness up here in this area from last week's range highs and a failure of 465 once again, a close back down here below this level will send this thing back to the range lows and continue to keep this corn market range bound. However, the bulls have an opportunity here to take it and run with it, and we should see them try and strike early this week. Otherwise, we will just see more boring, choppy markets here in this corn market. All right, and heading over to the crude oil markets, we are seeing the Sunday night futures opening up right now. Nice little gap open here above our 99.32 bull pivot for the week. At the moment, we're hitting above 100 and went for it high in there, up there at 102.44. This market continuing to see some volatility, a lot of excitement going on over there in Iran, so nice environment for crude markets. Last week we did see the Sunday night open up there around 97.5, seeing that nice early spike up there towards 120 in the Sunday night open. Throughout Sunday's evening session and Monday, we did see about a $40 range here in this crude market, coming back to earth a little bit, finishing Monday around 85. Throughout Tuesday and Wednesday session, we did see this market kind of try and stabilize and undercutting $80 briefly before tightening up here on Wednesday, setting the bulls up for a nice little rally. As we can see here, Last week we did have a nice little line being drawn right around the $89 level. Lots of inventory coming in, drawing a nice sharp line here, giving the bulls a chance to strike. That's exactly what we saw throughout Thursday and Friday session. Nice snap above 89, rallying all the way up into 99 here into the close on Friday, finishing up there at the highs on Friday, setting us up for more volatility and more upside. So anything above 99.32, look for some more excitement up here into the $100 to 120 range. We could see some more volatility. Just going to continue to monitor the situation over there in Iran, as this market is going to be at the mercy of the news and any sort of escalation over there. So look for more excitement there. Bears need to get this thing back below 92 and then 89 once again. If they're able to close back below some of those key levels, that could get this thing to kind of settle back down into the 80s and come back to earth. But at the moment, this market is just going to be at the mercy of the news and continue to see heavy volatility. So be cautious, be defensive, and let this market start to stabilize here before we start to get involved. And last week we did see volatility in the equity markets as well. The S&P with a gap lower there on Monday, the Sunday night open, pushing all the way down there, briefly undercutting 6,600 before seeing a little bit of a bounce there. Wednesday, Thursday, and Friday session last week seeing continued distribution, increasing volume, increasing selling pressure throughout the late part of the week. Not getting back to those lows, but still suggesting lots of distribution here and weakness for the stock market. The Nasdaq is still trying to hold these range lows. However, it did have a pretty weak finish there on Friday as well, suggesting it could try and attack this 24,000 mark, and anything below that could really open up the downside and get that selling pressure to accelerate. The Dow as well, also a lot of volatility early last week, but kind of settling back down there towards those lows. This Dow really failed hard over the last couple of weeks below that yearly opening range, losing all those major averages, and all this prior relative strength has started to unravel. Not a whole lot of spots to hide in this market here at the moment. There are some a couple spots where there is some strength. Oil and gas companies continue to offer good strength. And other than that, some of the former leaders in the fiber optics and data storage sectors are offering some strength, but there's just not a whole lot. This market's getting pretty defensive. We are seeing a lot of distribution in some of those prior leaders as well. At the moment, this is a time to be defensive and raise cash. If this market does try and stabilize, there will be a better time to get involved, but we want to see this volatility kind of die down before we commit to any more upside. Right now, we're going to continue to see some weakness and more volatility in this market, as a lot of the mega caps are still struggling. Not a whole lot showing any sort of meaningful strength. So in the meantime, expect to see more volatility and downside in these equity markets. Now is the time just to be defensive and kind of stay away from the markets. Raising cash is a good spot to be right now, as we'll continue to look for better spots to put our money. So in the meantime, be defensive, protect yourselves out there, and we'll catch you guys for closing comments tomorrow night. Thank you everyone for tuning in. Have a good evening.